Good morning, everybody. Here it is, the biggest day ever in the history of ever things being big days. It's Liberace Day, and we're all getting ready to see what Trump's going to play on his piano later on. Oh, I can't wait. We've only got how long now? Just under 11 hours to wait until we get to see what's happening. Bit of a quiet crowd I can see here today. Viewer numbers, you're all watching paint dry, doing the paperwork, getting ready. It's going to be potentially a very dull day until we get to the big event later on. Anyway, let's get stuck into it. Not too much news about, a little bit of data. So, not got a lot to talk about today. German engineering orders were up 8% in February. That was split by domestic orders up 11% and foreign orders up 7%, according to the industry body, the VDMA. Orders were up in the period 3 months, December through February, 4% year on year. Domestic orders, though, in that period were down 5%. Foreign orders were up 8%. So a bit of activity going on there in German engineering. Nonetheless, bit of victory lapping going on by the ECB. ECB's Escriva says we're getting closer to the 2% inflation goal. Recent price data confirms the disinflation process. That's after yesterday's flash CPI readings showing lower numbers in the Eurozone. Lagarde, she was out as well, saying inflation is very close to target. So there's only one way this can go, folks. Either they're going to be right or they're going to get slapped around the chops once again and be wrong. We shall see. Canada's PMI yesterday coming in a bit soggier, 46.3 versus 47.8 previously. And then a little bit of a surprise in the final US manufacturing PMI from S&P. We were expecting round about unchanged on the flash number at 49.8, which moved in contraction from last month, but it popped back into expansion in the final numbers. 50.2, though there's still a ton of uncertainty sitting under the surface there. And that jump may be, again, reflecting a bit of front running in manufacturing. Then we got the ISM, which came out pretty crappy. Was expected to move into contraction, 49.5, came out worse at 49. New orders doing a lot of damage there. Employment doing a lot of damage too, falling to 44.7. Prices paid, though, rocketing up to 69.4. Now, reading through the details of the ISM, the comments from respondents and the like, it was a story of tons of uncertainty, as you can imagine. The firms that did report decent activity likely put that down to, again, stockpiling, building up inventories, which means that activity, once done, is going to potentially fall off a cliff. Other firms highlighting that the stockpiling may have already come to an end. So it seems like industry in the US might go into a little bit of a pause while they're all waiting to see what comes from all these tariff stuff. And today is but one day in that journey, as big as it's being made out to be. So manufacturing looking like it might be grinding to a halt in the US, at least in the short term. You have to remember, if things get resolved pretty quickly, that will be a big boost to firms, and we'll see economic activity ramping up quickly again to compensate. But it's all walking a tightrope at the moment. Jolts was out, nothing really to write home about. 7.568 million, down on what was expected, lower than last month, although that was revised up anyway. The quits level came in a little bit lower than previously, but higher than expected. Quits is when people leave a job to change into another job. A high quits rate indicates when you're in a strong market that people are trading up jobs. When the quits rate sort of tails off and get flat lines, that tells you that people aren't confident in looking for work. Maybe they're worried about the jobs market, so they stay put, stay where they are. So that's looking like it's maybe flatlining a little bit for now. Fed's Daily says uncertainty isn't causing paralysis for businesses, though, as I've just mentioned with the ISM, that may start to become a bigger thing. Fed Barkin says the bond market is pricing in more recession risk. Right, let's get into all the tariff crap first. White House Press Secretary Leavitt said Trump has made up his mind on autos tariffs, and reciprocal tariffs will go into effect on April the 3rd. It says there are several countries that have called Trump to discuss these tariffs. Treasury Sec Besant apparently told lawmakers tariffs will be a cap, and that nations can take steps to go down from that cap. ECB's Wren weighing in on politics and Trump tariffs, saying Europe must give as good as it gets. Canada PM Carney says that to stand up to President Trump, we have to build an economy that serves everyone. He also says that himself and Mexican President Sheinbaum have held phone conversations and talking about economic cooperation there. White House Press Secretary also said that Trump is frustrated with leaders on both sides of the Ukraine war. There has been stories out from Russia as well, saying Russia cannot accept US ideas as they are right now. However, as they do not take into account of Moscow's need for root causes of the crisis to be addressed. So we're still at stalemate there, and the clock is ticking before, no doubt, Trump's patience runs out. He's not got just that to deal with today. Iran says that they will develop a nuclear bomb if Trump attacks. That's according to the Supreme Leader. And how about this for a bit of timing? VP Vance, the one who was slagging off Europe the other week, he's planning to visit Rome April the 18th through to the 20th. Maybe trying to ease tensions with Europe. Now, the only reason I pulled this headline up is because obviously he's pissed people off in Europe with his comments, but he's decided to go to Rome on Easter, which is probably the biggest religious holiday event in the Catholic calendar. So why he's going on a visit bang in the middle of that, it's and getting people to break their religious holiday to visit him, I don't know. So I don't know if he's realised the timing of that, but looks like a bit of a schoolboy error trying to do that one. Or maybe he's just going over for a holiday. Who knows? But that one didn't read too good for me. Himashu, I don't know why we're not on YouTube. It should all be plugged in. Maybe something in the back end going on. So I'll alert those guys after. But we've only got Facebook, Twitter, Zoom to watch the show on, so you're not going to miss out on anything. Well, you're here in Zoom, so you're not missing out on anything. But I will make that aware to our back-end guys and girls. Right, so to the big event, tonight's tariff stuff. So as you can probably tell by markets already, no one's doing anything. We're drifting around, not doing an awful lot. Here's dollar CAD on the short term, doing absolutely nothing pretty much since yesterday evening. Everyone's in wait and see mode. Okay, so we're going to get lower liquidity going on because no one's going to be pushing the envelope between now and then. The event is happening at 9 p.m. UK time, which is 4 p.m. US time. So it's going to be the evening for us over here in Europe and the UK for when this kicks off. Now, while we may not believe that we'll get, or we may be waiting until this moment to get all the details, don't rule out the press, the news wires, putting out pieces, stories, sources, guesswork, whatever, between now and then, okay? We've got a quiet market. This is the perfect opportunity for the likes of Bloomberg and all the rest to drop little sources pieces to get the market moving. It'll be a slow news day for them as well. So don't rule out them throwing things about just to get people excited. Okay, but other than that, we've got little data today. We've got factory orders and durable goods revisions, and we've got ADP. And that is about it. Okay, so apart from those moments, it might be a little bit difficult if you're thinking about trading. Okay, you don't want to be getting into a trade, a short-term intraday trade in something like dollar CAD, where it's glued to 143 and it's not going to move anywhere for hours. Okay, so this is all about planning how, if you are going to trade the event later. Now, for me, this is going to be a big old shit show, to put it bluntly. This isn't like a data point where we're going to get what's the number. Is it plus or minus? Okay, we're going to get floods and floods of headlines. We're going to get Trump waffling through it in his usual way, where he starts on one subject and goes off on a tangent and starts waffling and whatever. We do have a number marker to look at. This is the 20% tariff thing. So that's what the first thing the market's going to lean against, okay? And then the details. So if he slaps 20% tariffs on everyone, fine, we know that it was expected. If it's 25, that's higher. If it's 15, that's obviously lower, that's better. Okay, so that's the first thing to look at from many of these headlines. What's the number? Okay, then you get stuck into the details. What's the number on? Is it a cap? Is it a scale? All those little bits and bobs. But really look at this, or I'll be looking at this from two ways. A, what that number is, and secondly, what compromises, what get out clauses, opportunities Trump presents for those tariffs. He could say, "Yep, Canada will give you 20%," but as we've been talking to you all week for the last 2 weeks, we're working on deals. That's all good. We're going to give you another month or something, or we're not going to go as hard because we're talking and whatever. All that sort of crap that might be waffled around. Okay, so it's whether tariffs are coming and what the compromises and get outs that Trump has offered. Because if there are any get outs, delays, anything that means tariffs aren't going to impact in a big way from day one, the market's going to go with that, not the fact that tariffs are going on. So that, again, it could just be all messy. So we don't know what's coming from that. He could say, well, that tariff's not going to kick in for a week. That one's not going to kick in for 2 weeks. That one's going to kick in immediately. So it's just working out, is it good? Is it bad overall? Now we know, as I said, what the super nuts are of it. The sources pieces over the last couple of days saying that it could be a cap, it could be 20%, it could be scaled, it could be on certain sectors and industries, it might not be in others, there might be ones we don't know about. So there's a lot of unknown stuff in there as well. So really, this might just be a moment where we have to sit through it and try and pick the bones out before we think about trading. And then remember, whatever happens today, we're going to have the rest of the week, everyone responding, Canada responding, Mexico responding, UK responding, Europe responding, China responding. So we're going to get all those responses. Now, Canada, it was reported overnight by the Globe and Mail that they may not retaliate with their own tariffs straight away. So that's a reason why you've seen dollar CAD easing off those highs, because there's the potential for tensions to be lowered somewhat among it all. But otherwise, we're probably in buy rumour, sell fact mode regarding what we know about it. So if you are looking to trade, pick your levels. Probably makes sense to go wide on your levels. There's no point looking at levels 20, 30 pips away from current prices going in, because any headlines and prices are going to move 50, 100, whatever pips, possibly. Okay, so set yourself wide on your levels, whatever asset or pair you're trading. Okay, probably don't look at anything within 100 pips, or at least 100 pips of where the spot price is going in. Don't rule out seeing some jumpy moves as we get closer to the speech. Okay, because the market is going to do its last minute closing up for the day, reducing risk, and you might see some choppy moves. The closer we get to that time. Also, the data ADP. It is jobs week, so if there is a big variation in the number, you're going to get a move. But be very careful. Again, you don't want to jump on a trade on ADP, and that dies a death 5 minutes afterwards, and then you're stuck in no man's land, wondering what to do with it later on and sitting in that for hours. So I'm expecting a mess. Prepare for the worst. Everything else is a bonus as far as tonight goes. And I'm going to be forced to come back to my desk. I'll be doing the options anyway, but the last thing I want to be doing on my Wednesday evening is listening to Mr. Trump waffling on about whatever. So what can we say about prices? Well, dollar CAD has said not doing much. Euro dollar not doing much. We're glued to this 108 level. Again, no one's willing to push the envelope for this one. We've also got 2.31 billion expiring in the options, so there's a reason why that will be glued. No real other massive size in the expiries. Dollar CAD's got a few, but nothing huge. 144 is the biggest one, 103. Expect this to be stuck like glue. 4 p.m. Eastern time. That's Eastern time US. Nuno for Trump. Well, that's if he's on time. You know what he's like. It might be 5 p.m. by the time he actually rolls himself out from his desk and gets to the podium. I don't think I've ever seen him do anything on time, but there you go. The other thing you want to do is just identify. I mean, it's going to be a dollar trade. It's going to be a tariff country related trade. So anyone that's got big trade with the US is going to have their currency affected. So pick your pairs to look at. Obviously, Canadian dollar, Mexican peso are two of the big ones to keep an eye on, but you can look at some of the others, commodity currencies like Aussie dollar as well. That's looking a bit perky this morning, up a little bit, but this is another one that we could be up at 64s or we could be down at 62s just as easily. Catherine, the VIX. I'm not a big fan of the VIX personally, Catherine. You're wondering if it could be a short. I don't even know if I've got the VIX on here. Let's have a look, because I'm not, as I say, not a big fan of the old VIX. Oh, there we go. We have got it here. Oh, that's a bit wonky. There we go. So the VIX is a funny one because obviously you get a lot of options activity going on in here, and it is a people do use it as a measure of overall volatility. Really, it's a coin toss about going short. I mean, if you're going short, you're taking a punt that everything's going to be all right tonight. So if that's the risk you want to take, you're welcome to it. But I don't know. I'm more inclined to let the dust settle. If you're looking at volatility, this is just another moment like all the prior deadlines. Okay, we get to a deadline, we get a lot of trading action around it. Once we get the details, once you know what's going on, the market adjusts, it prices in, prices out, whatever it wants to do. We're going to get a reaction one way, shape or form. Then quickly, we're going to move on to what next. So if we get over tariffs and there's not much bluster, it's a buy rumor, sell fact thing, we know what's coming, we're not getting anything different or unexpected, then you're going to see volatility dropping out, the VIX dropping down probably, because the market goes, right, we're over that hump, we can move on and get on with it. But on that basis, you've got to ask the question, are we finished? Or is that just one episode we're over? If all we get is tariffs on autos and metals and the stuff we know about, that's fine. But he's going to come back with other sectors and other industries later on. We've already heard about pharmaceuticals. There's plenty of other stuff he can hit thereafter. So we might play the same game in a week, 2 weeks' time after we're over this hump. And if that's the case, you're going to see volatility ramping up again. So, where things are quiet, you only got to look at a historical chart of the VIX. When we're down at sort of 13, 12, 13s, that's when everyone's happy and everyone's ticking along. So you have got to think, if we're getting down there over this sort of stuff, you might want to think from the long side, because are we going to stay low vol for any real length of time? So yeah, I don't know about shorts, Catherine. It would be a bit of a coin toss from that point. I hope that helps or not. Gold, obviously keeping a close eye on this one because I'm long, so I need to be monitoring this one. I might take a decent chunk off of this long later, depending on what the price does. What I want to show you though quickly is fourth day on the trot. We've had this Asian buying. If you look at the clock, 1 a.m. to 2 a.m, midnight to 3 a.m, 4 a.m, 2 o'clock a.m, midnight through to 1:30, 2 o'clock. Okay, this is the fourth day on the trot now. We've seen Asia buying. So that's a thing that's going on at the moment. The difference with today is that we haven't seen any extension through. All these led higher highs, higher highs, higher highs. This one, not really. It came off pretty quickly. Not too dissimilar to yesterday, or Tuesday yesterday, but it has come off, and we were already coming down yesterday anyway. So what this price action tells me, it's two things. Yes, we've got buying in Asia, okay, and yes, it started after Trump announced his tariff stuff on the Wednesday. We got a reaction through Thursday. Okay, then Thursday evening we got that Asia reaction. So a lot of this is probably tariff stuff as well as Asian buying. And the reason for that is when we started getting those headlines yesterday, detailing what was coming, that the tariff stuff and how it's going to be planned out might be less than what the market was expecting, or not as bad as what the market was expecting. We saw gold coming off, okay, and then we got this Asia buying, and it found sellers pretty quickly, and we came off again. So that again just tells me that a lot of this move is obviously tariff led, risk led, market seeking a bit of safety in gold, but as soon as it's not looking as bad, we see that risk reduction. But it could also just be longs getting out, just taking some off the table, like I'm potentially looking to do later on, just to reduce my positions down a bit, take a bit of risk off the table. So it could just be that as well. But in the meantime, yeah, probably expect a little bit of sideways action here. I'm going to keep a close eye, because if we don't get above these highs in this sort of move, then I'm probably going to chop some. We have to do that while we're on the show. No problem, Catherine. Euro sterling, Mr. Michael Weissman. Coming off the boil a bit. It was looking like it was potentially motoring up to the 84 level. We ran into trouble around this old level around 70s, couldn't quite get into the 80s. And now we're coming off a bit as well. I think maybe the option stickiness in euro dollar is helping here, because the pound hasn't got that glue, so it's moving around a bit more, climbing a bit more, just because it's got nothing, it's not on a leash or anything. So yeah, the pound is moving up. I don't know, maybe it's just because, again, the UK is under tariff threat, but it's not going to be hit as hard as everywhere else, because we don't export fuck all to anyone much. So it's not going to be a huge economic impact to us like it will be for Europe and the likes. But I'm just surmising why cable's having a little rally up. That could be it. Again, it could just be position reduction Cable often moves more than euro sterling. So get through today, and depending on what happens, this one might get back on the bandwagon in just moving back towards the highs. But I'll be interested if we do get a reaction in the euro that's more than what's in the pound. This is obviously going to move quite significantly. So again, I'm going to be looking to park my potential trades at the wider edges, the bigger edges. I mean, I'd love something down at 82s, but I very doubt I'm going to get it. So maybe the low 83s is where I'd have to look, up towards this 84, 84.20, even up towards 85s. So I'm not going to be pissing around in the middle here. I can tell you that. I'll be waiting for the edges to see if we get moves on that. Dollar China I want to have a quick look at, because it feels like it's getting a bit antsy, just as we creep towards this stuff later on. Liberation Day, fucking thing. Why has everyone got to name these things? Stupid names. Anyway, so Dollar China is another one that's potentially going to be hit pretty hard on this. I'm still short this one. It's dragging on and dragging on and dragging on, but I've managed to take profits down here from my shorts up here. Again, I'm going to be looking for any extreme moves to either potentially add to shorts if we're up here, 734s, 735s, or chop my shorts if we're heading down here somewhere under 720s. So I probably wouldn't touch it anything until the high 730s or down towards the 710s, maybe even towards the 7 mark. But I think that's probably a bit of a wish, a bit of a hope more than anything else. And I don't do hope in trading. So otherwise, if we're just sort of stuck 730s, 720s, I've probably got no interest in it until then. What else you got? Anything else up there? Just reading your comments. Yeah, Duresh, all G7 responding. Yeah, everyone's going to respond to what's going on with this one. Dollar Mex is another one I'm keeping an eye on as well. I'm not ruling out another run up to these sort of highs. I'm in two minds. I've got my short on still from 21.98s. I've got my stop just above 60s. I'm toying with the idea of just sticking my stop way out the way, just to keep it out the way, rather than get stopped and then it doesn't get to a level I want to re-enter at and I miss it all. I'd rather still have skin in the game. So I'm thinking about moving my stops probably just above 21, 21.10, 20, something like that. It's a bit of a risk, but I've made enough money on the short already that even if I did get stopped on that, it won't be too damaging. I won't be getting too much back. Just in case I don't want to get pinged on my stop, and that's the high, and then it comes all the way back down through 20, because I'll be pissed off then, pretty much. So yeah, I'm thinking about that, but otherwise I am looking maybe to add back to the top of this zone up here if the news isn't game changing in any way, shape, or form. On the flip side, if we do get good news, this is probably going back through the bottom of the bottom of the range, maybe even back through the 20 level, even further, if it's really good news. So that's why I still want to keep some skin in the game. But that's a couple of things I'm looking at. And please pop up in the chat what you're looking at. If you're looking to trade this, how you're looking to trade it. Let me know what assets you're looking at for this one. Risk is probably going to be something you need to keep an eye on as well, how the market's going to react risk-wise to this. Looking at dollar yen, here we go with the usual sitting in the middle pretty much of the recent range. You can't pick a side for this one. We could be 152s, we could be 147s by the time this thing's finished. So look, and you can use this for a lot of assets. If you've got big levels that you're watching, 151.25, this fib up here, whatever it is you're watching, if you've got big levels, it's okay to see them break, but what you want to wait for is to make sure they hold that break. You know, if we bust through 151.20s on a Trump headline, that's all well and good. If you're long, that's great, but don't get sucked in to think, right, here we go, next stop's 155. Okay, it could just be a headline move, and then the market goes, thank you very much, you've given us a much better level to add back to shorts or to sell it, and then ping, you know, 30 seconds later you're back under it. So if you're in a positions that profit from sudden moves, don't look the gift horse in the mouth. Okay, take at least some profit off. I'm not saying you have to take it all off, take some off. Okay, just in case it's a wild headline move, it doesn't hold, and you'll be thinking, why? I just had 150 pips, 100 pips on the table. Why didn't I take some money? And now it's going all the way against me again, or something like that. So never look the gift horse in the mouth if you're in a position. Mike, no, as I've just explained, it could just simply be, you know, risk reduction, taking positions off the table. You know, it's been a seller since we had these highs again. Every time we got up there, well, the last 2 times we've been up there, it's been sold off pretty hard. It was looking very bearish. Again, a bit of easing in terms of what might come from this tariff stuff is probably adding to this as well. So it's a mix of all things. But am I going to judge this, what's happening in Aussie dollar today? I'm going to say, yeah, well, that's going to be what it's going to do for the next week. No, you know, as I said, we could be traveling under 62s or sailing above 64s later on. It really is a coin toss. Marcus, pound Aussie. Where is it? There we go. So you're long at 488. That's looking pretty good. So what are you doing? You're trading off a bit of a trend line going on here, something like that. Oh, it's a bit rough and ready, but you get the picture. Or have you got a level in there yourself? Let's have a look. A little bit of a level going on there. Is that what you're looking at, Marcus? It's looking like a decent trade at the moment, particularly with that pound going okay. So you've got a bit of double bubble going on there. You've got a bit of pound strength. You might keep an eye though with that Aussie strength as well. If it sort of starts hitting its head Aussie dollar around the 63 area, 63.20s, that might help you out a bit. But if Aussie strengthens as well, then obviously you've got a bit of a contesting play going on here at the moment. Oh, you're looking at the Gartley pattern. Yours, mate. All yours with your witchcraft patterns. I'll take your word for it. Stick a chart in the stick a chart in the chat room, mate. And I'm sure there's plenty of Gartley fans in there. Kiwi dollar Mike, of course, I'll look at that. What are you doing in the Kiwi dollar Mike? Not a lot to say about this one. We're still in this uptrend, very shallow uptrend, similar to Aussie dollar. This 58 level, bit of a zone. As you can see, it was a very, very strong support zone historically. We banged our head there. This is almost like the 64 in Aussie dollar. But again, we're middle of this range at the moment, give or take a few shekels. So what do you want to do with it, Mike? I've got nothing to do with it on this right now. You want to get long on a retracement. Okay. In that case, you know, you want at least that low to hold. If you get a fortunate trade, if the price goes in your favor, you may get something down 56, 55, 90s. And if it holds there, then that's going to probably keep this going and we'll see a decent bounce up, which then might give us a little run on this 58.40 zone up here. But be careful. If you get a headline move again, look at what happens. We've had these little extensions below, then it held. We may get something like that again today. But look at where, give it a couple of days. If it can't hold below there, you know, by the end of the week, then, you know, that's your time maybe to jump into a long, or you can just long it down there anyway and have a stop somewhere below those lows. Keep your trade sizes or my advice would be to keep your trade sizes a little bit lower today, maybe, because we've got this volatility. You want to try and account for that. So bigger vol means potentially wider moves. So you need to adjust your trading. So if you want to use risk the same amount of money you would trading intraday on trading this event, then you lower your size and you widen your stop so you can cover more ground for the same amount of risks. Okay, so if you're risking $500 on a 20 pip stop, okay, then risk $500 with smaller size over a 100 pip stop. Okay, that's how you can adjust your trading. You don't have to ramp up your risk just because you're ramping up the amount of pips you're trading over. You can keep your risk the same, just lower your trade size. Okay, all you want to do is not be wrong. Okay, doesn't mean you don't need to make as much money. You can make less money, but as long as you're making money and you're adjusting for the risk, then that's what you need to do. You always need to trade the conditions that are in front of you at any given time. Right, I'm going to call it a day there, folks, because everyone's just thrumming their thumbs on the table, really, waiting to see what happens later. Mr. K-Man should be back tomorrow. I don't know if he's... I think he's landing today, so I don't think he's going to be in today, though he might pop into the chat room. But he's going to be taking over the Flow Show tomorrow because I'm off on my jollies for a week. So I'm going to go and get some sun and leave you all to deal with the aftermath of Trump. Good luck with that. So have a great week while I'm off. Don't do anything silly. Make sure you give me plenty of stories about making pips and keep K-Man busy over the next week or so, because he's just had 3-week holiday. That bugger. But no, well deserved for Mr. K and seeing his grandson. So thank you very much. I'll see you all on Face later anyway, and you'll catch me around the socials, chat room later tonight for Trump anyway. Until then, have a good one. I'll see you soon.